all opinions. Please do your own research before investing. Should you need any kind of advice, right, kindly consult a financial advisor or contact your TR. Okay, so this is the content for today. I'll be sharing on CFD, which also means contract for differences, and the types of CFD instruments and how people leverage and trade CFD. And towards the end, right, there will be some technical analysis lah. With that being said, I'll start my webinar. Okay, so there are two types. Oh, sorry. Okay, so there are two types of market condition. In the stock market, right, there's only going to be two types of movement. First one being the upwards movement, the second one being the downwards movement. So when it's going up, right, we call it bullish. So when you hear people saying that, hey, the market is very bullish today, right, that means that the market is in an upwards trend. However, if the market is going down, then we call it bearish. So in a bullish situation, right, we want to long something, okay? It means that we want to buy something. So in order for us to profit, right, that particular thing, right, have to go up. Okay? So in order for you to purchase the stock price or the index price, right, okay, you have to look at the ask price. We must look at the ask price. Okay? Likewise, if you were to sell something or short something, right, for us to profit, right, the stock must go down. Okay, so we have to look at the bid price. So if you use our platform before, right, you probably have seen this bid ask pricing before. You can see in the slideshow, in the slide lah. Okay, shown at the bottom of the slide. Okay, to buy, we look at the ask price, which is the green box. To sell, we look at the bid price, which is the red box. Okay, so what is CFD? CFD, which also means contract for differences. CFD is a derivative product, which means having a value derived from another underlying assets. It is traded over the counter, traded via a broker-dealer network, which in this case, if you use our platform, is traded under Phillip. So one advantage of CFD is that you will be able to buy or sell, which means that you can profit at both bullish and bearish situation. Then again, this is depending on the type of strategy you want to use. Okay, when you hold or rather you long one stock contract, right, you do not own the underlying assets, but what you're getting is just a contract. Okay, you do not own the underlying assets. CFD is a contractual agreement between an investor and a CFD broker to exchange the difference between the value of a financial product between the time the contract is open and the time the contract is closed. Okay, so do note that different country equities have different marketing hours. Okay, so if you hold past the opening hours, right, then there will be financing charges. So I will discuss more on that later, which you will find out more later on. So the question is, what's the difference between a stock and a CFD? Okay, so one key advantage CFD have against stock is that we have leverage, which means that we can use lesser initial deposits, right, or rather lesser margin to gain exposure, which also we will discuss later. So CFD allows you to go long or short, which means that you can be profiting from both bullish and bearish market. However, for stocks, right, if you have used our platform before, you will be able to short or leverage if you're using a margin account. And on top of that, you have to have a SBL account. So the interest is the same if you are using a margin account to trade. But unlike CFD, right, if you have just one account, right, then you'll be able to leverage short and tap into other different asset classes, which is more convenient for us as a trader lah. And there will be financing charges applied if you hold a CFD overnight. Do note that when you purchase a stock, right, we own the stock. However, right, for CFD, it's just a contract. You do not own the underlying assets. So this is just a brief advantages of CFD, which I will explain a little more in depth. Okay, so CFD allow us to go long or short. When we think that the stock is going up, then we can buy. When we think it's going down, we can short the stock. We are not restricted by any market directions, and we can profit from both market, the rising and falling market. CFD allows you to leverage, where we can use lesser money to own more contracts. Unlike stocks, we have to pay the full price of the stocks. So CFD allows you to have multiple asset classes, for example, FX, indices, equities, commodities. Yeah. And ultimately for CFD, right, most of people use it, or rather one of the trading strategy, right, is hedging. So hedging is like buying an insurance in the event of in the event of unfortunate news, for example, bad news, earning report bad news, then at least your portfolio can be protected. So we can hedge your portfolio against the news lah. So using an example of S&P 500, right, to explain how we can trade in two directions using CFD. Whenever we think that the market will go up, right, we can long at the bottom and take profit at the top or wherever we think that is the highest. However, if we anticipate that the market is starting to fall, right, then we can immediately short the market. So we are not restricted by any market directions and we can profit in both situations. Leverage. Okay, so by now you should already know that CFD is traded on margin. So using the power of leveraging, right, we'll be able to take on larger positions using lesser initial deposits. With leverage, right, we can amplify our gains. However, do note that leverage is a double-edged sword because we can also lose a lot more, right, if the market goes against you. So one reason why people use leverage is because we do not have large amount of money to diversify our portfolio or gain exposure. So we tap into CFD, right, to gain the exposure. Okay, so let us compare, right, in terms of money. In terms of money, what's the difference between stocks and CFD? Okay, so if you can look at the table, okay, let's say, right, if we want to long 100 company ABC at $100. So for this counter, right, the initial margin required, right, is 10%. So for stocks, in order for you to hold this 100 at $100, right, you will need $10,000. However, using leverage with CFD, right, we only need $1,000. And using $1,000, right, we can gain exposure of a $10,000 contract size. And then again, how can we amplify our gains or loss? So how can we amplify our gains or loss? Okay, so for gains, right, if the stock goes up to 150, we'll be profiting $50 per share. So for stocks, right, we'll be up by $5,000 and that will be a 50% gain. However, for CFD, right, we'll be profiting the same $5,000, but actually, right, we are up by 500% because we are using $1,000 to profit $5,000. So wouldn't it be great gaining 500%? Okay, so let us hear about the bearish side. So when the market goes against you, right? So company ABC goes down by $10. So we'll be losing $10 per share. So for stocks, we'll be just down by $1,000 and that is 10%. However, right, for CFD, right, we'll be down by $1,000 also, but that is 100%. So this is why leverage is a double-edged sword. They can amplify your gains and losses. So let me show you how you can see your leverage, right, in our platform. So using our platform, okay, using Apple as an example, okay, let's say we want to long 100 Apple at $220, at 220. Okay, so when we launch an order ticket, right, you will see the gross contract value, margin requirement, and the long short financing charges. In the orange circle there, right, you can see everything lah. You can see that the margin requirement is 10%, which means that in order to hold 100 Apple contracts, right, we need around 2.9K SGD lah, of margin to purchase the contract that worth around 22,000. So from this ticket, right, you'll be able to see the long short financing charge. And do note that different counters have different margin requirement and financing charge. Do make sure that you check on all these, right, before you place an order. So these are the different types of CFD instruments. We have equities where we offer CFD and CFD DMA. We have commodities where is mainly in oil, gold, silver. We also have indices like S&P 500, SP 500, US Tech, Wall Street Index, and many more. There are even mini contracts for them. And we have Forex. So for our equity CFD, right, we have access to 8 different global stock exchange, and these are the 8, as whatever you see is whatever we offer. Okay. Do note that each country have their own operating hours. When the operating hours is over, you will not be able to trade, you will not be able to buy or sell. Okay, you can find them out more in our website. So if you used our platform before, okay, when you search on a counter like DBS, Singtel, SIA, you'll probably seen this. There's a blue logo, there's a green logo, and there's a darker green logo. So for the blue logo, right, is the blue logo named EQ, right, is the equities, which is your stock. If you see the green named CFD, right, is CFD, which is the derivative of the stock. So the darker green named CFD DMA, right, these are the CFD DMA. These are the DMA lah. And do note that DMA is only for Singapore. So for equity CFD, right, these are all cash settlement, and it mirrors the price movement of the stock. Okay, from the picture below, you can see that there is no additional spread. Okay, you can see that the bid-ask pricing, the CFD, DMA all have similar price. There is no additional spread. So all three of them have the same pricing. So like I said just now, CFD is a derivative product. Okay, so what is direct market access, DMA? Okay, so when you search a SGX counter, right, you may see CFD DMA. So DMA means direct market access, which is only applicable for SGX counters. Okay, so the order will be filled in on the actual exchange, which will participate in the exchange of the order book, which works very similar to stocks. We'll send the order to the exchange, and do note that is based on the last done price, not the bid ask price. So at this point in time, you'll be wondering that actually DMA is better because got the transparency and we'll be able to monitor it via the exchange. Yes, it is better, but for that transparency, right, we have to pay a higher commission rate. Okay, so do note that if you are trading CFD DMA, right, in order to locate them, you have to click on the CFD DMA shown in the photo below. Okay, so this is the summarized version of how CFD and DMA works. DMA gives you the full transparency. It trades on the market liquidity and order book of the exchange. Okay, so maybe I give you some time to read it, or you can actually read it on our website. Okay, so how do we calculate the profit and loss? Okay, assuming we long 10,000 shares of stock A, okay, at $2. Since we are in a long position, right, in order for us to profit, right, the stock must go up. So this stock A, right, has to go up by $1, go up in order for us to profit. So if it goes up by $1, which is $3, then we'll be profiting $10,000. If it goes down to $1, right, then we will lose $10,000. So basically the difference between the price entered and the price exited multiplied by the quantity. Likewise, if you are in a short position, in order for us to profit, the stock must go down. So using the same example, right, if it goes down to $1, we'll profit $10,000. If it goes up to $3, we'll loss of $10,000. Literally the opposite from a long position. Okay, so moving forward, what is commodities? Do you know that commodities, right, are part of our everyday life? And they are actually the raw materials, right, we can use in our everyday life, our daily life lah. So to help you better understand of the meaning of commodities, right, let us look deeper into the girl in the picture. So what is she wearing right now? So her clothes, right, is actually made up of cotton. Cotton is also a commodities. Cotton is a commodities. And where can she get those clothing from? Probably from online shopping like Taobao, Shopee, or whatever online website, right? Which the delivery, right, requires oil, okay, which is also a commodities. So what is she holding right now on her hand? A cup of coffee, which is also another type of commodities. So girl being girl, right, she will buy jewelry like gold, silver to wear on like accessories, like those accessories to wear. Okay, these are also commodities. So when she goes shopping, okay, she either drive or take public transport. So all these transport, right, is also operated by oil, which is a commodities. So in short, right, commodities are segregated into three different sectors. Okay, metal, energy, and agriculture. Metal is like our oil. Metal is like our gold and silver. Energy is like our oil and gas. Agriculture are the crops and livestock, right, that have been raised and harvested to provide food. So in our platform, we do allow you to trade commodities. So these are the commodities that we offer. Okay, there's no expiry date, so the margin is as low as 20%, and we do provide the mini contracts. So if you remember earlier on, right, I shared about how we are able to see the margin required. So we'll use the same method, okay, to find the difference between the USD1 and the USD100 for the mini contracts, like the difference between the mini contracts. So for USD1, right, the value per point is $1. Okay, so if you were to go in a long position for the gold USD1, right, it goes up by $10, right? You'll be profiting $10. So unlike the USD 100, right, the value per point is $10. So if it goes up to $10, right, then we'll be profiting $1,000. So assuming we want to long go at 2.3K, okay, we can see that the contract value between both, right, is different. One is 2.3K, okay, one is 2.3K, 100 is 230K. So if we were to do some math, right, if we divide the gold one USD 100 by 100, right, technically we are also getting the same as the gold USD one. So the good thing about the USD one, which is the mini contract, right, it means that it's good that it's because it requires lesser margin for traders who wish to trade and gain exposure, right, but have lesser initial capital. Yeah, so this is the meaning for mini contracts. So moving forward, okay, what is index? So this is a method, right, to track the performance of a group assets, or rather a method to measure the performance of a basket of securities. So let's use Straits Times Index, right, which in short STI as an example. So STI is a capitalization weighted index that tracks the performance of the top 30 company listed on SGX. So there are 600 over listed companies in SGX, but SGX only track the top 30 companies. So all these 30 companies, right, roll up into one easy to read average price. So if you hear people saying that, hey, the market is going up today, so highly likely, right, they are referring to STI is up. Not because STI is the market, right, but STI, right, is a representative chunk of the market. Because they have the largest and most influential company, right, or rather the big cap companies in Singapore, and the big cap companies are likely to be more stable and established in Singapore. So as long as you come Singapore before, or you stay in Singapore long enough, or rather you stay in Singapore, you probably have heard these 30 companies inside STI. If I have to name a few of these companies, right, they are like the DBS, OCBC, UOB, our big three local banks. So if you see, also let's say if you see that STI is doing well, right, you know that Singapore economy likely to be well, okay? Do note that if you see the big companies not doing so well, right, then the chances of the smaller companies to outperform is slimmer because they are more volatile. So in our platform, these are the indices that we offer. However, though these are the uh, commonly traded ones lah. You can view more in our website. We do offer mini contracts too. So same thing. So this is the mini contracts for our indices. Yeah. Okay, so let's move to Forex. Okay, so when we buy or sell a trade, right, it means that we are referring to the base currency. So an opposite transaction takes place in the term currency. So this is just the theory part lah. Okay. So for this particular example that I'm sharing, right, GDP, okay, GDP is the base currency and USD is the term currency. So in short, we call it pound dollar. Okay, so let's say, right, if we were to buy pound dollar, technically we are buying the pound and we are selling the dollar. So we want pound to strengthen and the dollar to weaken. So how you can understand the codes, okay, assuming the pound dollar, right, is at $1.20. It means that 1 pound, right, can get us $1.20 USD. Okay, so likewise, if pound dollar is 1.3, which means that 1 pound dollar, 1 pound can be exchanged for 1.3 USD. So based on this quotation, right, the profit and loss will be reflected in the term currency. So, right, if you're in a long position for pound dollar, definitely we want the pound to strengthen, the dollar to weaken. Okay, so when you hold a FX CFD positions overnight, 5 a.m. for daylight saving and 6 a.m. for non-daylight saving, right, the position will gain or lose the swap points. So the gain or loss is due to interest rate differential between the currency bought or sold. Interest is earned on the currency bought, while interest is paid on the currency sold. So the swap points gain or loss, right, will be credited and or debited from your CFD account as a swap point adjustment. So if you use our platform before, okay, you will be able to access to more than 30 major global forex pair and we tracks the performance of the underlying stock forex, the spot forex. And the margin is as low as 5%, which is 20 times leverage, and the minimum contract size is 10,000 as the base currency. So commission is only applicable during the opening and closing of the CFD position. Okay, so when we enter a position, right, we are charged the commission. And then when we close a position, right, we are also charged commission. So commission for equity CFD trades, right, are charged based on the total contract value of the CFD. Do note that different country counters, right, have different commission fees. Okay, you can check in our website to know more on the particular fees. Equity CFD, right, that are traded within the same day for the same counter, right, will be charged on an algorithmic basis, which means that the collective commission is charged based on the total value of the day transaction instead of charging separated commission on each transaction. So for commodities and indices CFD, right, they are charged on per site, per lot, per contract basis. And CFD is and commission, right, is not applicable for FX CFD. Okay, so to find out more, you can view our website. So now let's dive deeper into financing charge. Like I mentioned earlier on, we will dive deeper into financing charge. Okay, so when you hold a CFD position overnight, right, then you'll be subjected to overnight financing charges. Okay, so this is accrued on a daily basis and will only be realized upon contract rollover or liquidation of CFD positions. So one common question, if I open and close within the same trade day, right, do I have to pay the financing fee? So remember when I said that we have to hold pass overnight, right, then we will be subjected to financing fee. So overnight doesn't mean after 12 a.m. It means that when the market is closed. So if we were to open and close within the same trade day, right, then there will be no financing charges for that. Okay, so the charges is only charged, right, when we hold the particular contract, right, after the market close. So this is how you can calculate the financing charge, and this is the formula. So financing charge is on a daily basis of the closing price, assuming that, okay, so this is an example of what happened and how we can calculate the financing charge. Okay, assuming that we long one CFD and we close it on the third day of the third day. Okay, so day one, right, we close day one, this particular thing that we open, right, close at $1,000. Day two, it close at 1.2, and day three, you liquidate it. Okay, so you do not have to add the financing charge for the day three because you did not hold pass overnight. So this is the calculation of financing charge. So how can we use CFD? So actually there are many ways to trade CFD, okay, depending on the strategy you use, your goal, and what you want to achieve at the end of the day. Some people buy, sell, and hold. Some people use the scalping method, the scalping strategy, and some of them use the self-developed trading strategy. So the first method, right, is buy, sell, and hold, where you just buy or sell and hold. So the reason being, right, is because the cost is uh lesser as compared to stocks. Because stocks you have to come out upfront a lot of cash ma. So for this one, right, you just have to come out a portion of the initial deposits, okay, where you will be able to attain a higher exposure and have a more diversified portfolio. Or even if let's say we plan to get more dividends or capital appreciation, yeah, we can always just buy and then just hold. Okay, so for us to buy and hold, right, is because we believe that counter will do well. So for us to sell and hold, right, is because we believe that the counter will underperform. Okay, so scalping is mainly a day trading strategy where they will monitor the chart, and when there's a given opportunity, right, they will just close the position and earn off those small price changes lah. So for example, let's say you enter a stock at $41, $41.5. So 5 minutes later, right, the stock become 41.55. So these scalpers, right, will take profit and earn that 0.05 per share. And they'll do it over and over again. So they will slowly stack their profit. So in order for you to do really well for scalping, right, you have to be good at your technical analysis. And there's also some self-developed strategy, and is based on your own type of strategy. So it may be a mixture of indicators. So they monitor the chart very closely and looking at indicators like the candlestick. For example, if the candlestick is showing any head and shoulder, maybe cup and handle, or maybe they see the trend line. Yeah. So some some people use moving average and some people use moving average, okay, and also some people use the support and resistance, supply and demand to help them make decisions when it comes to trading. So if you were to Google some technical analysis, right, you will see that some charts is very complicated and there is a lot of different indicators. Personally, right, I use a mixture of a few indicators, not just candlesticks, but moving average, support and resistance, trend line. Yeah, so these are the few indicators that I use before I proceed with the trade. So then again, different indicators have different indicators good, different indicators will have different indicators bad. So it's based on your strategy and liking. And ultimately, some people trade it for hedging. So hedging is a strategy, right, used by some people. So hedging allows you to hedge against the negative event. So for example, earning report. So if you've been actively trading, right, you should know that those earning report days, right, there may be a increase in volume of the stock. Okay, the trade volume of the stock. Okay, when the when the earning is really really good, right, the stock price will go very high, will go up. However, if the earning is bad, right, then investor will start losing trust in the company and start dumping it. There is also news like war, or rather COVID. Okay, there will be a huge drop in prices lah. Okay, because there's a lot of fear in the market. So hedging is like an insurance. So it protects you against all the unforeseen circumstances. So you think that the market is going against you, right? Then you don't need to worry because you hedge out your position. Sometimes you may even profit out of it. So hedging can be done by establishing opposite positions. So two types of instruments to use, equities or world indices. So if we hedge fully, right, that means we establish an opposite positions for each counter for the same counter and same quantity. If we were to hedge partially, right, means we establish opposite positions in correlated instruments like STI. So indices are a good hedge against portfolio of index-linked stocks. So this is based on a fully hedged. Okay. So assuming you already have 1,000, you have long 1,000, you have 1,000 long, okay, at $23 at your stock account. For whatever reason, you do not wish to close it. You just want to hold for long term. Okay. And we know that something bad is happening and we decided to hedge fully. So for example, like an earning report, okay, you expect that this counter will do very badly. Okay. So we went to hedge fully by establishing an opposite position for the same counter, same quantity. And then if the stock go down, right, we are good because we won't be affected by the big loss if the market goes against you. So for example, when the stock goes to $21, right, then our stock side will be negative $2,000. But our CFD side, right, will be a positive $2,000. So if you were to net it off, right, you're okay because it's zero profit and loss. So maybe at $21, right, you can use the profit from CFD, right, to buy more stocks. So it will bring down your average price. Okay, so I'll be sharing on my view on how I see the market right now. So even though there was a recent dip or rather a small correction sometime last week, okay, the market still look very bullish. So if you were to think about it, right, for this year itself, right, the market have been performing very well already. Okay, you can see based on the past 6 months, right, we are up by 700 over points and it's about 14 to 15% gains. So I think it's just a small correction. Do not be scared. The market is still very bullish. Based on this year itself, we are still on an upward trend, and they have not shown any sign of a big correction happening. Okay, so right now I think it's good time to take on some long position. Wait for some retracement, they can take on some long positions. So for those of you that already have positions, good for you. However, for those who have yet to buy or uh looking for some corrections, looking for opportunity to buy, right, then you can actually just wait long because I believe that there are a lot of opportunity in the market right now. Okay, do not have to be FOMO lah. So personally, right, I'm holding some already, and I will look to buy more at the 5K level. Okay, however, if it goes down lower, right, then I'll have to buy more. Yeah. So this is my technical analysis for Microsoft. So we do know that last week, right, there was some blue screen issue that happened to Microsoft, which is one of the reason why they fell quite badly last week lah. Okay, they fell by a bit lah, not very bad, a bit only. Okay, so in terms of their overall performance this year, right, they are still in a bullish trend. So what I see, right, they broke out the short-term downwards trend, okay? And right now they are at the resistance one line at 444, around 444, okay? So they have formed a higher high and formed a they have formed a higher high and a higher low, which means that I believe, okay, they will go up to the resistance two in soon okay? I do see them. Firstly, they have to break past the 444 level, okay? And then they have to hold the 444 level for a while, okay? Before they go up to the 455 level. So these are some levels for you to take note as a Microsoft trader. So these two note on this level. Okay, so this is my technical analysis for Amazon. So remember my last webinar, right? Okay, so all these lines, right, are the same line. Okay, so I only draw resistance 2 for this webinar at 196. Okay, so what we see right now, right, okay, they have respected all these lines very well. Okay, so right now they are forming back to their range between 180 to 190. So you can see that whenever reach that 180 support, it goes up. Reach the 189 resistance, it goes down. So if they are in a range lah, okay, so you just have to take note on these few levels. I personally think that they will be back at the 196 level as a support, right, in the long term. So yeah, these are some levels for you all to take note. Okay, so with my conclusion, I believe that with the current market situation, right, there are few things that I can advise or rather recommend you to do. So first thing first, do not time the market, but it's time in the market. So I know that a lot of us, right, try to time the market and get the best price we could. So if I could turn back time, right, I'll definitely ask my parents to all in the stock market about 20, 30 years ago, 20, 30 years ago. But then again, right, we also cannot predict the future, ma. But what I would say that just don't time the market, lor. Just be in the market because we never know when the price will continue to move upwards. So one strategy, right, I recommend people to use, right, is the dollar cost average. But that's a topic for another day. You can read up on this strategy when you are free. It's called dollar cost average, DCA. And this strategy allows you to stay invested in the market and such that you do not miss any opportunity. Otherwise, you can take on CFD positions to hedge out your risk. Okay? And always remember that it's always good to take some profit because be it small or big profit, right? A profit is a profit. And then if necessary, right, you can consider to cut loss also lah. Okay? And wait for a better opportunity. So right now I'll be sharing on how you can create an account. So you can just take a screenshot if let's say you wish to take a screenshot lah. And then later after this webinar you can refer to it. So for our existing customer, right, you may create an CFD account via here. Okay, click on account management, CFD, and online account opening. Alternatively, you can visit our website to create a new account and follow the steps. Or you can call your TR, okay, or you can walk into Phillip Investor Center. We have quite a few locations. You can check them out on our website. Okay, or you can scan the QR code. Okay, so in order to locate us, you can check our website lah, or you can see it from here. So these are some of the outlet. Okay, so you can fund your CFD account via this method. You can click on you can take a screenshot lah. Okay, alternatively, you can do it via PayNow. So if you were to do it via PayNow, you can watch the tutorial. Or for direct funding into CFD account, right? Kindly add CFD at the back. Okay, so currently, right, we are having a promotion where we are giving out Palantir TCM and sorry, not TCM, Palantir TSM and Microsoft CFD. Okay, so it's valid until 30th August 2024. Okay, you can scan the QR code to find out more on this promotion. Okay, so this is the tiering list. So how can you achieve a Palantir TSM and Palantir TSM or Microsoft? So if you can open an account today and you opt in for the CFD, right, you will get the Palantir CFD. And then if you were to do some trading and then you trade a required amount respectively, right, between you trade the required amount, right, before 30th August 2024, right, then you'll get a TSM CFD or Microsoft CFD. Okay, so to achieve the TSM, you have to trade 1.5 million CFD contract value. And to achieve Microsoft, right, then you need to trade 4.5 million. So to achieve the trade volume, you can achieve it via equity CFD, index CFD, commodity CFD, forex CFD. So you're not restricted by anything lah. So I really hope that you all are able to get those CFD. Okay, so it's the Q&A session time. So do you all have any Q&A? Do you all have any questions to ask? So give me some time to read the chat box below. Okay, so if you have any questions, just ask. Okay, in the meantime, you can scan the QR code to find out more on the promotion. In the meantime, you can scan to find out the promotion, or rather you can scan to open an account lah. So if you wish to find out more, you can scan them lor. So give me some time to read. Yeah, hi. So a lot of you all have been asking, is the webinar recorded? Can the recording be shared? Okay, so the recording, right, is recorded, and then we will send a follow-up email with the link of the recording within the next few days lah. So you all can stay tuned and then wait for the recording to be out lah. Alternatively, you can find them on our website. So for Delphine Zhang, you asked that where you can find which stocks can do CFD. Actually, you can check in our website, or rather, you can just go to Poem's website, right? And then you check on the stock that you're finding lor. So for example, you want to see whether Palantir is in our CFD. Then you can click on, just write in Palantir, and then there will be a CFD logo for it lah. So you can check based on this method, or you can check our website for it. Okay, so someone also asked that if I'm an existing Phillip client, right, with stocks, right, do I need a CFD account to trade? Yes, you will need a CFD account even if you have a stocks account. So like I mentioned earlier on, if you want to create an account, you can always scan the QR code at the bottom right. So another person also asked, how come some how come some counters, right, I see in CFD trading, right, is only for long, so you cannot short. So depending on the type of counters that you are referring to, there's a possibility, right, that the counters are restricted counters. So due to our own risk management, right, we are unable to borrow the scripts. So therefore, we leave it to liquidation only, so you cannot short the stock. Okay. However, right, if you encounter such situation and you wish to trade, right, then you can always call us up. Then we will do our best to facilitate and cater for you lah. And this is also subjected to approval. Okay, so someone asked, how do you do dollar cost averaging? So like I said, this is a topic for another day. Okay, you can always Google it up, or you can always stay tuned or wait for the wait for us to actually share on the dollar cost averaging. Does financing Okay, so someone asked, does financing charge include weekend? Yes. If you hold past the weekend, right, then we will count based on per day basis lah. Okay, so is there any more questions? Otherwise, we will end the webinar here. Okay, so if let's say you all have any questions that have not been answered, so you can either call your TR or you can always call in the hotline, right? Or you can read up on our website lah. Okay, you can find it here. Okay, so for more information, you can view on Phillip CFD on our website, Phillip CFD, and read the info sheet to find out more details about it. Or you can always call the dealing desk where we will assist you lah. Thank you so much. Thank you for tuning in today.